Hi everyone, and welcome to the webinar, and we are good to go. We've just been waiting for the recording, so thank you for your patience. Before we start, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of entering this business with money that you cannot afford to lose. Brilliant, there we are. Next one, here we are. This is myself and my husband David. We'll be here going through the charts for the indices. This session is we call it the day trading session with NinjaTrader. We've both got NinjaTrader platforms today actually, and we were I think going to have a look at TradingView, but probably going to save that for next time. We'll be looking at the charts through the prism of volume price analysis, which is the methodology that David and I have been using for the last 20 years or so, both for trading and investing, and also how we apply the quantum trading tools to the charts. And in particular with Ninja, the day trading, it's tools from what we call the Ninja Essentials package, and I'll go through some of the indicators later on after we've had a look at the charts. If you've got any questions, I can see actually we've got some of our quantum users in the room. I think we've even got some users who actually have taken the Forex program. But to be honest, the tools, the methodology, it's almost irrelevant what the ticker is at the top of the chart. It's the same methodology, and other than the specialist tools that we've developed for Forex, we use them across all markets and across all timeframes. So let's get started with that. Let me just take that down. I've actually got, right, before we start, let me just quickly go to the calendar at the moment. Let's have a look. And I've got this little link to share with you on the Fed as well. What's interesting, we had a session a little while ago. We looked at Forex, the start of the US session, and the session coincided with the release of the retail sales, both for Canada and the US here. We've got the core retail sales and the retail sales, and that really put a bit of a spring into the market. But if you look at the charts at the moment, all seems to have gone a bit, not quite pear-shaped, but everyone's not very happy. And this is because of these releases here. This is the PMI data. Now, on the calendar, it's actually shown as, actually that's a low impact. Yellow is low impact, isn't it? Is yellow low impact, David? It is, isn't it, on Forex? Yeah, on Forex Factory. And now everybody's starting to say, oh, the PMI have come in much lower than expected. 50 is the inflection point for PMI. And this is a very classic case of the traders, predominantly traders, I say traders and investors, they've taken the good news around the retail sales and pushed the market up. And then suddenly when the PMI data in, which is really hard data, which is the purchasing managers index, it gives a very clear view of where the economy may be heading in the next sort of few months or so. And this is, as I said, this is the PMI data. And if you've got a broadly expanding economy, you actually want to see that going up. And here we have a chart for the PMI. This is the manufacturing PMI, which has fallen slightly, but it's the services one here. There we are. This has also fallen back as well. As I said, 50 is the inflection point. Anything above 50 is considered to be good. Below 50 and moving lower is not good for the economy. But it's one of these situations where, okay, it's been given a low impact status, if you like, on Forex Factory, but it has had an impact because it's come at a time when the indices are, as you don't need me to tell you, looking at your charts, everything is looking, it's up at almost at all-time highs. We said last week the wall of worry. Is it going to go any higher? Well, as dear old Jesse used to say, yes, it can, basically, but there'll come a point when there will be a major correction. It happened last December. There was a correction and it's recovered from there. Other items of news this week which have helped to sustain the bullish tone, obviously the news from China. So it's the case of the market picking those items of news that is, that confirm their view, if you like. It's a bit like confirmation bias. You have an opinion, you have a view about something, and you look at the evidence, but you only give weight to that evidence which is going to support your view. And as a trader, that is absolutely fatal. So we're going to move over to David's system. We're having a look at how we actually day trade all this news, what is happening on the charts, whether there's an opportunity to take some trades, because the news has all happened. We're moving into the markets will be closed tomorrow. We've got the Easter holidays coming. So after this sort of volatility that we've had in the last couple of hours, really not sure what's going to happen for the rest of the day. It may just sort of all quieten down because, as I said, the holidays are coming up. We'll see. I've got Home Depot up at the moment, and there's a reason for this. I know we don't usually look at stocks, and it's because I had a message on Twitter from someone who wanted to know why there was this collection of candles that we see here on the daily chart, and they all look, as you can see, there's Home Depot had broken away from the volume point of control. We have two up candles here. Not a huge amount of, not a lot of difference between the volume under that candle and that candle, which of itself is kind of an anomaly, and certainly moving away from the VPOC. So it's kind of no surprise to see the weakness on this candle. But what he was saying was, well, I've got perceived weakness there, or actual weakness, because you've got a wick to the top of the candle. Then we have a kind of repeat. Then we have a sort of weak. It's not a doji exactly. You've got some buying coming in, but you've got weakness there, and you've got a pivot there as well. And then again, and then actually, the stock took off, as it were. So why did you have this collection of candles and it didn't actually reverse? Well, there's a number of reasons for that. First of all, I'm going to go back and say, watch this video because the answer is just too not complicated. It just takes too long for me to type out, basically. But the one thing I'm going to make a point of is that if you're looking at this daily chart, you really can't watch the daily chart in isolation. You have to look at it on another time frame. And when we look at the weekly chart, yes, there is weakness on these days, but on the weekly chart, it is actually in quite a nice trend higher, as it were. And these intraday moves moving lower, that's all they are. And on the down candles here that we have, you look at the volume underneath it, there's nothing there to suggest that this is going to reverse and actually just sort of collapse out of sight. You haven't got the volume underneath it. I accept here you would expect weakness because the volume under that candle there is anomalous. For the spread of that candle, you would have expected, well, a lot more than you see here. You only have to look at this candle over here, look at the volume under there, and so that of itself. But again, first of all, don't ever look at a collection of candles, price action and volume in one time frame. Always have a look at it on multiple time frames. And if you're looking at the daily chart, I would have expected to have a look at the weekly as well. I know David's got something to say on that as well. Then the next thing you have to look at is here on the support and resistance side. We can see the resistance here. This is actually part of the VPOC resistance that we have here. Once it cleared there and you've got a reasonable amount of rising volume, great, the price goes higher. That's a sort of in keeping, certainly those two volume bars, but certainly that is slightly higher than that. Then you have another pullback, but look at the volume underneath it. So you know that's not going to go any further. And then gradually there's a push up of volume there, and then they are in keeping with the spread of the candle. Then we had another pullback, but look at the volume again, and so on and so on. This is on one chart. If you look at it with the weekly chart, then you will see that you have an explanation for this congestion period that you saw on the daily chart, and you see the weakness on the weekly chart. But the weekly chart does show that the anticipated move for this stock is to go higher. David, is there anything you want to say about that? Add to that? No? Oh, I thought you were... I all right. He's got nothing to say about that. Do you want to move over it as well? Yeah, and we'll just talk about it. Yeah, fine. Actually, do you want to do the weekly chart then? And then the guy who emailed me, he can have two voices instead of just my one. Is that okay? And what I also want, talking about the volume point of control as we have here, the volume point of control is based on elements of market profile. And on NinjaTrader, the closest sort of standard indicator is volume at price. And again, I had another, it was actually from the book, from the volume book, on one of the images. And the question was, well, why was the price at, why was one considered a breakaway, a breakout? And when it hit another region on the volume at price, it wasn't considered it was a reversal. And essentially, the way the VPOT works, and certainly the volume price works as well, is you're looking at volume, price, and time. So where you have the densest volume here, in other words, price has been trading around this this point on the chart for the longest time. You can see the histogram moves over. So this is your volume point of control. So from here, you are going to get a breakaway. Now, on this occasion, it was to the upside, but you can have it equally to the downside. Now, when it reaches you have low volume nodes and you have high volume. This is a low volume node here. So you know when it gets here, chances are it's going to go through fairly quickly, and it's actually been marching up rather well. The other thing to bear in mind with congestion phases here, this also explains it was, it spent 3 or 4 days, 4 or 5 days in congestion. So if you like, on the VPOC, the volume on this axis was building, as you can see here, but it doesn't necessarily say, oh well, that's an immediate reversal, because we've had the breakaway from the point of control. And as I said, you have to see it in multiple time frames as well. But when you see this density of volume on a high volume node, what it is, it's going to take a little bit more effort to actually get through. But Home Depot did get there, and it'll be interesting to see where it goes next. Can I pass it over to you now, Dave, and you have a look at perhaps you could add your 2 pennies worth.
Or even more than 2 pennies worth. Might get threepence or sixpence as our old currency.
You've got NT8.
I have got NT8. Should I not have NT8?
No, it's great.
Yeah, I'm on Ninja 8 and Anna's on Ninja 7. I won't bore you with all the differences, but Ninja 8's a bit more sexy and has a few more bells and whistles. Just to pick up on Home Depot HD on the weekly chart, I think the week that was being referred to was actually at the end of March. So I'm guessing it was in here somewhere. Possibly that one. I don't know.
You've got to go on week numbers, haven't you?
I think it was that one, because that was the end of March. So I think it probably was that candle there. So when you look at it on the weekly basis, it's it's not a negative sign as such. Just bear with me one moment. Sorry, for those of you who come along regularly, you'll know we have 2 dogs, and they've just kicked off. Bear with us a moment. I'm just going to switch off for a moment. Apologies, sorry about that. Just had someone come to the door with a delivery. I just had to, the dogs let us know all about it. Just to pick up where I was, you think it's this one? I'm pretty sorry. Okay, all right. Well, whatever it is. What's far more interesting actually about this chart now, looking at it, is the price action over the last few weeks, certainly from this point onwards, where we've got rising price and we've actually got falling volume. So from a perspective of looking at the daily chart, and really just reinforces what Anna was saying about looking at you can't just look at the daily chart, you've got to look at other timeframes as well. When you look at the daily chart and the weekly chart in combination, then what you expect to happen as far as this stock is concerned, at any rate, all things being equal, is that we are likely to see at the very least a pause, possibly a reversal. And in some ways, it also reflects what went on in this phase of price action. This was the start of the year, coming out into end of January, early February. Again, falling volume. Market was rising, and then it's rolled over, and we've got a reversal. So from a weekly perspective, just looking at the stock and certainly looking at the price action, I know we've got a holiday coming up, so we've got narrow spreads, narrow price action. It's not particularly moving quickly. And also what's highly suspicious is this candle here, the amount of volume under it. I would expect to see more volume under, given the amount of price action on the day. So all things being equal, it looks as though it's shaping up for some sort of potential short-term reversal. If it does manage to, if it does reverses but continues higher in the longer term, because it's remaining bullish for the time being, certainly on the trend monitor for this time scale, then the volume is falling away, which is a good thing. So once it gets up to 210, it should go through 215 pretty clearly, pretty easily. We've got some bit of price resistance in there, potentially an old level. But other than that, you know, that's where we are with HD. Let's head back over to the time-based charts for see where we are with the YM. I've gone to the YM today. I've got, just in terms of time frames, I've gone to a very quick chart again, had this up last week. This is 15 seconds in the top left. In the middle, I'm on 3 minutes. Over on the right, I'm on 5 minutes. Down at the bottom, I've got 15 minutes. So, you know, these are fast time frames. I've got the Renko running here as well. I've got the daily chart over here. As Anna said, just for context, just move the chat out of the way. There we go. That's where we're trading right now. Looks like we're setting up for a doji candle, indecision, all the rest of it. But it's what's interesting about today is really a game of two halves, to use a football analogy. This was this two bits of fundamental news, really. Game of two halves. This was the first half. This is now the second half. And we're now seeing that bearish price move away from what was positive sentiment reversed into bearish sentiment, purely based on those two bits of economic data. As you can see, the trend monitor is moving pretty fast on the 15-second. It's what you expect to see, but it's now reflected on the 3 minute. It's reflected on 5. We're into bearish. On 15, we haven't yet seen that transition, but if we carry on lower, then we will. What's interesting about the 15 is we're coming down to a very strong level here of potential price support. You can already see that it's been tested in this particular bar, which has got another, where are we on 15? Another 4 or 5 minutes to run. If we get through that one, there's very little in the way of price support available for a deeper move, but we are in some deep volume congestion here until we get down into these lower levels. So we've got another decent level of potential price support here as well. So it'd be interesting to see whether it breaks that region or not. Let's just see what's going on the other time frames. That's on 3 minutes. And we're trying to move away from the volume point of control. We've gone below through this level, so this is now going to act as a resistance to any rally. That's a pretty strong region. That was tested 5 times. You probably can't see it there, but the thickness of the line denotes the strength of support and resistance in these regions. So that's pretty decent, and was certainly retested on the reversal here and held. So that's now capping off the reversal even more so. We're now coming up to 2 levels here, which are side by side, so they're pretty strong together. If we get through there, then we're down into low volume nodes. I should go through there fairly swiftly, and we're back down to, where are we, 26,410. So there's another 30, 40 points of opportunity in that move, because there's very little, certainly on the 3 minute. in the way. Let's just have a quick look up at the 5 minute, see what's going on there. Even better news on the 5 minute. We've got low volume nodes in here, so we should expect the market to move through there pretty swiftly. And this is where we've got some really, really strong price support platform in place here at the 390 level. So in terms of opportunity, if you're getting into this now, you've got maybe 50 or 60 points of decent opportunity. If the momentum picks up, that last candle's nice. Tried to rally, fell back, good volume underneath. Weakness ahead. We'll be down 15, 20 points on that candle already. Just go back up to the 15-second really fast. Trying to rally all the time. Not a lot of volume under that last candle, but it was an attempt to rally. It's like this one, attempt to rally and falls back. Good volume under that one. A lot of selling in that candle. Very little amount of selling in this one. Go over to 1. Let's go over to 3 minute rather. The reason I haven't got the volume building in real time is that it builds on the market, on the candle close, purely to manage the amount of data I've got, because I've got other stuff running on here as well. So it's just to keep it all under control so that doesn't overload the system too much. I'm trying to cram as much data in here as possible. And we've got GoToWebinar running as well. This was the open. This was the market open, and it was. We had a couple of 2-bar reversals. One came in here, carried on higher. Then we had another one came in here, and you overlay one candle on the other, and you've got an upthrust or weakness, if you like. Buying and selling, buying and selling. Want to see a close below this level, below 450, maybe down to 40, 48, 47, 46, something like that. So we get away from these two regions here. And you can also see on the trend monitor, the transition went from blue to red straight through. There was no change in transitional colors. There was no dark blue, no dark red, nothing, just went straight across, straight through, signaling a change in sentiment from what was bullish at the start into bearish. And really just does reflect that shift in sentiment through two pieces of fundamental news. And as Anna said, you have to, I know Forex Factory is a great site, but from time to time I disagree with their ranking, and so does Anna. And to put that down as a third tier piece of news is nuts in my view, but there we are. So you have to be aware of how important this kind of data is and draw your own conclusions from it and give it your own ranking, if you will. Every calendar will rank them slightly differently, but to put it as a third tier level is a little strange, to put it mildly. This was the 15-second was a chart we were on last week because we were in very thin markets, similar to this in a way, and it just gives you an opportunity. If you are a day trader and you're happy trading on these really fast time frames, fine. Why not? A lot of traders aren't. Some are not comfortable trading at this sort of speed and in and out of the market literally multiple times in a session. And the other advantage of moving to this sort of speed of chart is it's great for learning VPA as well. It just gives you some great analysis very quickly. It teaches you to be fast in the analysis, to see all the things that are going on, pick them all up. You can see in this rally, there's a decent level of support that's just flashed out the way, but there was a decent level of support there. This is dynamic. It's constantly changing all the time. Trend monitors transition. We've got rising volume, rising price, so that's pretty positive for this move higher. But bear in mind, this is a scalping opportunity, so you're not going to be hanging around in here for more than probably 2-3 minutes maybe at the most. You're looking to get in, get out, get in, get out the whole time based on what you're seeing on the chart, based on what the volume is telling you. Now what you're seeing is a fall in volume. Now we're starting to see it rise pretty quickly. Let's go over on to the slightly slower time frames. Let's go up to 5 minute. What have we got? We've got some buying coming in on the 5 minute. We've got the hammer. We've got decent volume underneath. We're expecting to see a rally. Why? Because we're seeing this. We've got buying coming in now. The market sentiment has shifted again. We've seen enough of the downside. Now we're starting to see some buying coming in. It may not be strong enough to move it very far. And to be honest, if you're scalping on 15 seconds and you've got the VPOC over here at, where are we, 495, if you go back over to the 15-second chart, you know for a fact that not far ahead of you, you've got the VPOC, which is up here somewhere. It's all about speed. And the same is true on 3. We've got the volume point of control here as well. And down onto 15, exactly the same thing. And what's interesting about the volume on 15, you can see it here. This is the inverse of what I was talking about in terms of the Home Depot chart, where we were seeing rising prices and falling volume. Here we've got falling prices and falling volume, which is an anomaly because you expect to see falling markets if they're strong under rising volume, and it's not, it's under falling volume. So what that is telling you loud and clear is that the selling pressure for the time being is diminishing, it's falling away. The sellers are withdrawing from the market or closing out positions, whatever, the big operators, they are not selling heavily.
Sorry, Neville says he can't hear you.
Oh, I've got my microphone on, can you hear me?
Yeah.
Yeah, okay. I think everyone else can hear me okay. So basically, that is what you're seeing. You're seeing anomalies in terms of groups of candles now, as opposed to anomalies in terms of single candle, single volume. And it's just a classic sign that you look for all the time. Rising markets being associated with rising volume, good. Falling markets, rising volume, good. Falling markets, falling volume, bad. It means the momentum is draining away from the market. The sellers are withdrawing. Now the question is whether we're going to move away from the volume point of control, because we're back in there again, certainly on the relatively slow chart of 15. Right, the 15-second chart is picking up again. Off we go again. Looks okay for the time being. Trend monitor's fine, good, low volume, no problem. Now we're coming up to volume point of control on 3, volume point of control on 5. May cause this one to pause a bit. And the reason we saw this little reversal here was if you look at the volume here associated with that candle, way out of whack, tons of volume, market didn't really go very far on that time frame, so we saw a mini reversal off it. No great surprise. That's anomalous given the other volume price configurations over here. Okay, trend monitor is good, that's all fine. Nothing changed on the trend monitor on 3, nothing on 5. You wouldn't expect it just yet, but maybe shortly it will shift. If this continues, now we're up to 5. Nice solid move. Very straightforward on the 15-second. A little bit of anomaly here. You've got a narrow spread candle, you've got higher volume, bit of weakness coming in. This candle should have been much wider given the previous one. It isn't. Now we've got a bit of selling coming into the market. Decent selling actually when you look at the volume profiles across here. In fact, you can compare all of these because this is all the same time frame, same session. So we've now got bearish engulfing candles. This one's been engulfed by that. So we're looking for a move to the downside now. Off we come. No great surprise because we've hit the volume point of control here and we've hit the volume point of control here. So it's no surprise our 15-second chart is pausing. Stay with that for a minute. Just speeds everything up, makes it a bit easier. Decent volume under that candle, looks a bit weak. Tried to rally, not hugely, but certainly tried to rally off that price action. Didn't go anywhere. Confirming the weakness. Now we're coming down to test a very minor level, should go through that pretty swiftly. Got a decent level in here. It's a 3 level, so this has been tested 3 times. Trend monitor shifting. Come out of bullish, and we're transitioning through, possibly into red again. Just have a look and see what's happening on the other indices. There's a little bit of divergence going on. This is the YM on the daily, trying to rally a little bit. That's holding up, but the other two have come off. That's the ES, that's on the day. Very narrow price action doji candle there, but down as far as the day is concerned, and the same on the NQ. I've certainly got some weakness shaping up here on the NQ with that decent volume on the daily and a pretty weak looking candle there. We are getting into new highs and all of that, and nervousness, so it's no great surprise to see these markets really crawling higher. They're not moving higher with any great speed, that's for sure. And down the bottom here, I've got the 5 minute. I've got the 5 minute for the YM, 5 minute ES, and 5 minute for the NQ. All pretty much the same in terms of intraday price action at any rate. Not sure what I've got on tick. I've got the YM. Okay. The other way of trading these markets is using tick charts. Tick charts exactly the same as Renko in the sense that they don't have any relationship to time. So you will see momentum. So as the markets speed up and slow down, you will see it reflected on the tick charts. Just need to set these up. This is on, we're running on 377 now. Change that over. These come off the tick speedometer, which delivers it over here. This is 1597. And this one is running at 987 at the moment. There we go. Okay, so now we're running at the right tick speeds. We're in harmony with the market. Whenever we've got the red transitional colors here, that simply means that we're seeing a lack of participation. You can see it pretty clearly here. We've got a very, very low volume here. Participants are just either withdrawing, sitting on their hands, or just not taking part right now. Same here, we're in red and orange up here. And again, we've got the volume point of control is prominent across these time frames also. Go back to our time-based charts again. So we're going to have another run to 500 maybe. See how the selling pressure's fallen away. There's tiny low volume bar here under this one. We've got the VPOC here. This is the fulcrum of the market, but we've also got some price-based potential support here immediately above it. The red dash line, pretty strong. It served as a platform on that candle. See if it's tested again, getting stronger. And remember, when you get up to these big numbers, certainly the half numbers, 26.5, 26.250, anything with a round number, 100 or 50, you can expect the market to, at the very least, pause at those levels, maybe congest briefly, purely because there will be a load of orders stacked in those regions, because most traders are pretty lazy. They'll put them in at whole numbers. Zeros and fives are the most popular. Spike in volume on that last candle. It was falling away here. Then we had a spike. Bit of weakness come in. It's come off that candle, that volume. You have to remember, we're trading around this region the whole time. And in context of the daily, it's just a very thin market. Doji candle on 15-second. And that's the Renko I've got running on 1 minute at the moment, I think. Let's just... And this will deliver the optimal setting for this particular index in this particular period of the session. I'll just click it down here and it's going to open a 10 brick Renko. That is the optimal setting. It does it for you automatically. That's why we call it the Renko optimizer. So it automatically tells you that you don't have to guess, you don't have to choose a particular setting for the brick size. It tells you automatically what is the optimal setting to run for this particular market for the YM right now. So we're running on a 10-point brick size. And it will automatically calculate that according to the index, whether it's on ticks or index points or whatever the metric may be for that particular instrument that you happen to be trading. The trend dots always transition first. They are closest to the market. They will always transition before the trend monitor. The trend monitor takes a more considered look at changes in sentiment. In other words, it's looking at that sentiment and trying to consider whether this is indeed a true change. In other words, from a primary bearish to primary bullish or primary bullish to primary bearish, or whether this is merely a pullback in the trend. In other words, the trend remains intact, but it's just a secondary reversal or pullback. But the trend dots work very close to the market, and they will always transition first. And then if it is a true change in sentiment, the trend monitor will follow suit a little bit later. So it's trying to keep you in all the time. If you notice in these periods here on the up trend, where the trend dots flattened, they rolled, we had a few changes in color into red here and then back into gray, which is the congestion color, and then we're back out the other side. We have this exactly the same here and pretty much the same sort of thing here. But the trend monitor didn't change at all. It just held you in right the way from here all the way up to the top. Then it transitioned when this was in fact a true change in sentiment. Can't seem to get through 500 at the moment. Decent level of price resistance overhead. This one, and we've got a very strong platform in underneath on this one. So trading in a pretty tight range, coming down to test it now. You can see it being tested. Down onto the VPOC. Gone through now. Now we've got volatility come in. So we've got volatility on the 15 second. Let's see if we've got any volatility elsewhere. No. And with the volatility trigger, what we're expecting to see is a reversal back inside the spread of the candle. So we'll come back up onto the VPOC again. Which is exactly what we've got. The volatility indicator triggers in real time. I know this is a pretty quick chart, but if this was on a 1 or 2 or 3 minute, something like that, this triggers as soon as the price action has moved outside the average true range. Then it triggers. Then you expect congestion and a possible reversal. That's why it's such a powerful indicator. And it's ridiculously cheap. It's $57, I think. It's just unbelievable. And it will get you out of difficulty. It will get you out of trouble time and time and time again. And stop you getting trapped into fast moves, because the emotional trigger, the reason the big operators, the market makers use it all the time is because it's an emotional trigger. When you see that price action, your instant response is go short, jump in, go short, bang, it's reversed. Now you're in a weak position. If we can get through 500, then this market might take off, because there's a decent platform in underneath. How far above 500? You want to go a little way beyond it, because there's always the risk of it coming back onto the whole number scenario. But if we can get through there, then terrific. But it's all very thin. That's on 3 minute. That's what we're trading on the 15 second. Very, very tight. Just going to switch off for a moment. Yeah. Just checking out the all-time high figures. Yeah.
Right, it did actually go over 27. It got to 27,023.
Okay.
Which it went in October last year, just before the big sell-off.
Right. Just over 27. Okay, here we go. We're going to have a run at 25 at 500 now. There we go. Looks as though we're going to get through that. Okay, now we've got a decent. You can eyeball it through here on the 500 level, more or less. Low volume above. Down to 15. But the whole time, it's everywhere you look, you've got congestion around the VPOC, and until we get a decent way of move from that, certainly in terms of the slower time frames at any rate, just depends whether you're comfortable trading on such a fast chart as a 15-second chart, or even faster. 1 minute's pretty quick. 15-second does move like grease lightning. But it's a great way of learning VPA. Now we're taking off again, gone through that low volume stuff, very little in the way at the moment. Okay, good volume under that, that's fine. Nice widespread up candle, no wicks. And you might think, well, do I actually want to trade that? That's personal choice. All I would say is that, in there, 10 points, $5 a point, 50 points, $50 rather. Okay, take off the spread. But nevertheless, there is money to be made in there. And it's exactly the same as I was saying last week in terms of very narrow spread days. There are opportunities to make money. It's just a question of whether you are comfortable doing that or not. If you're not, then you have to sit and wait for these days to pass and look for better opportunities where you've got good volume, nice, even price action that moves up steadily or down steadily, and then trade those particular days. That's not to say this won't develop today. Certainly moving nicely at the moment. Trend monitors keeping us in there. Nice bright blue on 3, and you can see the transition coming through onto 5 now. We've gone bright red, dark blue, maybe come out the other side into bright blue. Maybe that's your preferred time frame on a 5-minute time horizon. That's what you'd be looking for. The scalping guys down here, they're already filling up with what's going on their really fast charts. And you can pretty much read this candle by candle. When you look at these two, for example, this is a nice example. We've got 2 candles, wide spread, little wick to the top, narrow spread, little wick to the top. Look at the volume. You've got higher volume on the second one. So what do you expect to happen on the next candle? You don't expect it to follow straight through. You expect a little bit of weakness, so you get a bit of weakness. That's what you're expecting. That's what VPA teaches you. It teaches you to anticipate what is like to happen next, but more importantly, through knowing what is like to happen next, it calms the emotional response to any reaction to the market that's against you, because it's based on logic and common sense and analysis. It's not based on emotion. Volume's falling away here. But look at the selling pressure on that last candle, very low volume. So, we're not seeing rising volume. We're not seeing, this candle, and then suddenly we've got another big down candle and lots of volume coming in. The volume's fallen away on the downside. So where's the market going to go? It's going to go to the upside. Big spike in volume on that one. Huge spike. Pretty much, let's just pull that back. That's pretty much the highest volume of the session as I can find. Well, say the session going back over to 1520, going back about an hour or so. That's high volume. That's okay. The candle was a nice widespread, but given the amount of volume in there, could well be some selling going on in there, given that we've seen this nice rally so far. A little bit of weakness on this candle. Buying's falling away on that last candle, but nevertheless still holding. Nothing at the moment to frighten us too much. Another pivot coming in here. But this is a little bit of concern because it's just come out the blue from nowhere. This quite happily trading along on these sorts of levels, and suddenly you get bang. That at the very least should set the alarm bells ringing. You should say, hang on a minute, there's something not quite right here. So we're on 15 second. Let's see what's happening on the other charts. 3 minute. Here we go. That candle hasn't finished yet, so we can't really analyze it at the moment. On 5. That looks okay on 5. We've got a nice widespread candle, no wicks to mention, and decent volume here underneath. So from a single candle perspective, certainly on a very slow time frame when compared with 15 second, that looks okay for the time being. This candle was not anomalous in that sense, but it was a curiosity in the sense that it came out of nowhere, ton of volume coming in into a market that had been trundling along on these relatively sedate volumes. So you have to question what is going on there, and then you've got to read what's going on in the candles that follow. Again, the selling volume is not particularly high on that last candle. Decent volume under, and this is really reinforces the point, if you will. This candle here and this volume configuration look correct. This one here doesn't look correct, and in fact, if you look at the spread of this candle with the spread of that candle, this isn't very much greater, and yet the volume is maybe 3 times as high as here. So is it any wonder we saw this congestion phase building? There's probably profit taking going on in there. Traders getting out. Let's take our profits. We've had this nice run up. Bang, let's close out. They'll flood in and close out. Now we're seeing the continuation. Again, this is a nice candle. This is what we expect to see in terms of volume, given what's gone over here. This one stands out like a telegraph pole as anomalous, which is why we saw this reaction against it. Since we went through 500, we're now looking at 30 points. It's not bad. Take off the spread, maybe 25, whatever. Okay, now we're starting to see a pickup in some selling coming in. The volume here was lower, but this one's higher, so we've got a little bit more sustained selling coming in. We've also got a pivot gone in here, a little bit of weakness off this candle, so we're expecting a reaction lower. Trend monitor's keeping us in, bright blue here. Now we transitioned over on 5 up to bright blue. And if we go down onto the 15-minute, this reaction didn't really cause us any flicker in terms of the longer term trend in inverted commas on the 15-minute. So, it's kept us through that. Hasn't really changed. We've had, pretty strong platform of support here, which came in. It went through it, but it recovered, so it didn't close below it. And now you can start to see over on the 15-second chart, we're starting to see a possible shift in sentiment here. Gone into dark blue. You can change that over to 1 minute maybe. There we go. Just gives a different perspective. That's on 1. Have a look at the 2 minute. There we go. Just confirming that little bit of weakness coming in. Hit some minor, very minor resistance price point here. Quite high volumes here. Now we're starting to see the reaction off. Heavy selling coming in on 15-second. You can see it here. Nice widespread down candle. Good strong volume under that. That's excellent. And the repeat, same again. That's fine. Trend monitor is just confirming that. We've come off. And it really all goes back to this sudden spike that we saw, which just sets the alarm bells ringing, just says, hang on a minute, there's something odd going on here. Don't like the look of that particularly. And now we're starting to see the reaction back down towards where we've come away from the VPOC here, but certainly back down towards the VPOC on the 2s. I've got this on 2, let's change it back to 3. There we go. Looks like we're going to come back down onto the VPOC again, and probably the same on 5. So there's lots of opportunities. It's pretty thin markets, pretty narrow. That's what it's doing on the day. Are the trades to be taken? Yeah, of course, there always are. Depends on your appetite for speed, for risk, for lightness on your feet, delicacy of touch, whatever. Not for everybody. A lot of traders love doing that. I enjoy it. Other traders don't. It's you have to choose what suits you, because if you're doing something you feel uncomfortable with, you won't make money. It's as simple as that. But the one thing I would urge you to do is use those really fast charts to hone your skills of VPA reading, because if you can read at speed, then you can trade any market, any time frame. You don't have to trade the fast ones, but they are great ways to learn your craft. And we've been doing this for a long time. It's second nature to us. It might not be second nature to you. I'm going to pass back to Anna to wrap up, and wish you all a great weekend. Hope you've enjoyed today, and we will not see you next week because we're not around next week. We're going to have a week off, but we will be back the week after. So have a great weekend, and if you're in the UK, enjoy the fabulous weather.
Thank you, James. Okay, as I said earlier on when we started, we were looking at the indicators from quantum trading. This is the ones that David and I have developed for Ninja 7 and Ninja 8. You can choose either, but as you can see here, there are indicators for MetaTrader and also Trading View as well. I think are we looking at TradeStation, David?
We are.
Yeah, we're looking at TradeStation as well. And I also said the indicators are from what we call the Essentials package, which is basically all the Ninja indicators except but removing the ones for Forex. And what that comes to in terms of cost is all these indicators here, this tick, the VPOC, the Camarilla levels, which you haven't actually looked today. You can also use it next time. Perhaps put the Camarilla levels on that. It'd be interesting to see how they work on the very fast time frames. And they're like levels that are based on price, and they kind of give hierarchy to the levels. If you know Camarilla, they're normally based on 4 levels. We've actually developed one for 6. The Renko optimizer, the trend indicators, the pivots, accumulation distribution, and that all comes to 749. Has reduced. If you bought them individually, it'd come to $1,400. But you can buy indicators individually. As David said, if you invest in any of them, then $57 will buy you the volatility indicator, and like all the indicators, whether it's the package, the full package, the essentials, or the individual one, it's all covered by our 7-day money back guarantee and supported by our fantastic support staff, the guys and girls who run the back end for us. I tell you, they are. I drive them like cracking the whip all the time. They seriously, they're fantastic, and they work 24/7. Not 24/7. We just cover the all parts of the globe, as it were. So that's what you get if you invest in your in indicators. And of course, volume price analysis, it's up on Amazon. You can buy one book, you can buy the whole series of books are there that so you get to learn what volume price analysis, the principles of volume price analysis, which you can then apply to your charts. Is there anything else you want to add to that, David? Have I missed anything? No, fantastic. Yes, thank you so much. Those of you who've wished us a very happy Easter here. And it's certainly, if we're blessed with the weather, it will be a fantastic holiday. Normally it's actually pouring with rain and freezing cold, so it makes a difference. You all enjoy the rest of the day, the rest of the weekend. Next week, there's bank holiday on Monday anyway here. You'll have to check. Some markets are open. Forex, I think, actually sort of stays open, doesn't it, David? It all depends whether your broker is around. So, but, it's going to be very low liquidity, lots of price spikes, probably best to take a few days off and enjoy the time with your family and friends, and then come back on Tuesday. The markets are entering an extremely interesting phase. They're always in an interesting phase of price action, but perhaps even more so with what's going to happen for the rest of the year. So as David said, we are definitely not back next week, but we will be back the week after, and probably may even add some extra sessions, but we will contact you via email and let you know. So, as I said, enjoy the rest of the day and the weekend. Catch you next time. Bye.